Hello everyone, welcome back to Just Invest Today. And today we have to talk about Alibaba and JD.com because it's just getting out of hand. This is the time where everyone is telling me to sell. You're losing out on all your positions. You don't know what you're doing. It's getting out of hand because we're seeing Baba at all-time lows. We're seeing JD.com at all-time lows. And it's just the whole market, like the comments, they're just getting to all the Alibaba shareholders and JD.com shareholders because we are seeing the S&P 500, Metas, the Googles are all at all-time highs while all of our stocks are at all-time lows. So a lot of people are getting frustrated. You can see the comment sections and there's people just saying Baba's a bad pick, JD.com's a bad pick. I've been in Alibaba or JD.com for around like 3 to 4 years or coming up to 4 years, I think. Yeah, coming up to 4 years. It looks like a bad pick because the stock isn't doing what it's supposed to do. But this is where we have to open our eyes and understand that the market is driven by sentiment, man. It's the story, the story, the story. The future stock price of any company is all about the story. What is the story right now for China? China is bad, US is good, China is doing this, the property market, the CCP, they're taking over everything and there's no de-escalation. Like, that's the narrative of the Chinese market and the Chinese stock, all about sentiment, the story around China. So that's why you just have to really like bite down. You have to go contrarian with a degree of skepticism because think about it. If we just look at the company's fundamentals, how much money it's generating, you see JD.com generating $5.4 billion on a $43 billion market cap stock. That's around 12-13% yield on your money. Like in any other world, you got a 12% free cash flow yield on a stock or on a business, you would just love it. You would just be head over heels. And the business is growing the 3P business, the logistics business. 1P business is not doing as good, but you got to think about JD.com and just the sales of the business. It's more high end. It's more kind of like housing and like kind of fashionable stuff and more electronics. And that market hasn't been doing that good in China. So that's why the stocks like PDD are growing so fast and growing quickly because everyone's like looking for more discounts, more group buying. So that's why those stocks are more successful in this kind of a recession market. So we can kind of see that trend reverse sooner or later. And then we have Alibaba growing revenue at 8% last quarter. We see the international business growing double digits. We see the logistics growing double digits. Cloud growth is still slow, but I think that will recover in the future. We're just seeing every section of the business of Alibaba growing. They're getting a free cash flow yield around 13 to 15% as well. So if you put your money in that type of business, you would love that. Like you would not be so like down on yourself if you're getting 13% on your money of buying a growing business. So that's why you just can't look at the market and what the sentiment is providing you because this is the sentiment going on. This is what's happening in the market. And this is same sentiment that happened with Facebook when Facebook was generating billions of dollars. People said Facebook was dead. Even though they were generating all that free cash flow, people still said it was a dead business because that was the story. The story said it was a dead business, even though it was growing still and it had a long runway to grow. You still see the same thing with Baba and JD. They have a long runway to grow. So this is not the end. You just have to look at the bigger picture of what's going on. And people keep saying, China, China, you can't invest in China. Why is PDD at like freaking all-time highs, trading at like a 30 plus PE? Make it make sense. Like, what is it? Is it China is bad, you can't invest in it? So why is PDD at these all-time highs? Can we not invest in China when Apple has 80% of their manufacturing in China, 30% of their revenue is in China? So like, which side are you on? Can you invest in China or you cannot? If you can't invest in China, you need to sell your Apple right now. You literally need to sell your Apple. Like, it just doesn't make sense because they're getting these cheap manufacturing in China. They're getting 30%, 20 to 30% of the revenue from China. Can you imagine that haircut? If freaking China and US go to war, why is Apple selling at these all-time highs if everyone is worried about China? Like, it just doesn't make sense. So that's where you have to get this open mind of just ignoring the market. The market is saying one thing, but we are looking at the business and what it's generating and what it's going to do in the future. And we're going to sit back and sit tight. People might disagree with this. I know a lot of people are going to disagree with this because, again, price drives narrative. Alibaba's at all-time lows. JD.com is at all-time lows. So people are going to say it's a bad investment, it's a bad stock. Even though JD.com's margins are growing, the free cash flow is growing, the revenue is still growing, but they're not going to see that. Alibaba's revenue is growing, free cash flow has been growing, their margins are improving. They have a new CEO came in and said they're going to improve the business. Like you just see what's happening and what narrative that the market wants to show you, and people are just going to agree with it. So guys, leave all your comments down below. What do you think about Alibaba, JD.com at all-time lows? The narrative around Chinese stocks. This is just a rant, but guys, what do you think? Like this video and subscribe.